then that's a sure sign not that the cycles have suddenly disappeared. Because one of the great and very comforting things about Hurst cyclic principles is that those cycles are in the market, and they're in the market forever and to stay. Hurst discovered them in the 1970s, and the same cycles are still there now, 40 years later. So when markets get very compressed, as happened in April, and enter a sort of a wedge or a very narrow trading range, it doesn't mean those cycles have suddenly disappeared, but it means that for one or other reason, the people who are engaged in the markets are fighting the cycles. I imagine they're fighting the cycles, but they're just, of course, going about their usual trading activities. But it looks, when you look at a chart, as if though the cycles are being sort of hidden or kept back. The market's being prevented from moving in a true cyclical fashion. It might sound like an odd thing to say, but I believe that if markets really could just do anything they wanted, then they would move in a perfect cyclical manner. And when they don't, when they get squeezed into little narrow trading ranges and so on, it's an indication that the cycles are still there, but they're being prevented from showing themselves. Whenever that happens, one needs to be very wary, as I discussed last week, of the cycles suddenly reasserting themselves with a very strong move, which is, of course, exactly what we have seen over the past week in Australia. So, what is happening now? How much longer are your markets going to go down? Are they has the Australian market turned around? Is it going to bounce out of another trough? The one great thing about trading using cycles is that markets never keep going down forever or keep going up forever, because markets move up and then down on a constant basis. So in order to sort of take a look at what's going to be happening over the next period of time in the Australian markets, I'm going to first of all look at this analysis in the Australian market. And then I think it's very important to look at an analysis in the American market. And following yesterday's trader chat, where we had a sentient trader user express an interesting opinion about the position of the 20-week cycle in the American markets, I'm going to have a look at how that might affect what's happening in Australia and how it might influence our analysis of the Australian markets. So if we have a look at what's been happening in the most recent 18-month cycle, let me just zoom out again. If you have any questions or any comments or your own analysis opinions, please do put them into the chat window. I'm delighted to hear what you have to say. So just pop them into the chat window. I'll do my best to answer. And opinions I will be very interested to hear about. Also, don't be worried if you have very, very beginner questions. I'd be very happy to answer any level of question, whether beginner or advanced. Okay, so as I have already discussed, you can see that the 4.5-year cycle has been shaping up very nicely since March 2009. Price movement has been remaining within that 4.5-year cycle semicircle. And, of course, the next shorter cycle in our cyclic model that we use, which is the original cyclic model as defined by Hurst in the 1980s, which extraordinarily is still active in our markets today. The next shorter cycle is the 18-month cycle. And, of course, there are 3 18-month cycles that play out within each and every 4.5-year cycle, because the average wavelength of the 4.5-year cycle is 54 months, and the average wavelength of the 18-year cycle, 18-month cycle is 18 months, and there are 3 times 18 months in every 54 months. So you can see that 2 fairly well-shaped and very good 18-month cycles did play out. Let me just draw over them. What do I mean by well-shaped? You might know that I'm obsessed by the shape of a cycle, so I tend to simplify the shape of a cycle. And so here are there's the approximate shape of the first 18-month cycle. What I mean by a well-shaped cycle, well, a cycle never looks like a perfect sine wave. Instead, it looks like a capital M, just as I have drawn it. A well-shaped cycle is a cycle that follows the rules in terms of where the peaks and the troughs occur. Now, as you can see, the peak to this 18-month cycle was late. In other words, it was after halfway through the cycle. Okay, here is the peak. I've just drawn a cross above that peak. There's the peak above that cycle, which of course occurred in April of 2010. Now, that is what we would describe as a late peak because it didn't occur right bang in the middle of that cycle. And so a cycle that has a late peak is a bullishly shaped cycle. The other thing that makes this a bullishly shaped cycle is that, of course, the final trough at the end of the cycle occurs at a higher level, as you can see, than the first trough right at the beginning of the cycle, where that particular cycle started. Okay, so that is a bullishly shaped cycle. Now, why do I call that a well-shaped cycle? Well, if a cycle is following a fairly high magnitude trough, and I've mentioned already that this is a trough of at least 54-month magnitude, 4.5-year magnitude, then the first shorter cycle following that sort of high magnitude trough should be a bullishly shaped cycle, because the underlying trend, remember, is the combination of cycles longer than the cycle that you're considering. So we're considering the 18-month cycle here. So the underlying trend of the 18-month cycle should be, after a high magnitude trough, should be bullish, should be pushing up, and there is indeed a bullish 18-month cycle. Let's look at the next 18-month cycle and the shape of that particular cycle. The shape of that cycle, when I draw the classic M shape of the cycles, is very much as I've drawn over there. You can see that although the peak of that cycle, which occurred over here, let me draw a cross over there, the peak of that cycle, which occurred in March or perhaps April of 2011, is a late peak. In other words, it occurs probably a little bit after the midpoint of the cycle. But the trough at the end of that particular 18-month cycle occurred lower than the trough at which that cycle started. Now, those are the two main features that we use to determine whether the shape of a cycle is bullish or bearish. So is this a bullish or a bearish shaped cycle? Well, the fact that it has a late peak tells us that it's a bullish cycle. The fact that it has a lower trough at the end than the start tells us that it is in fact a bearish cycle. So we have a contradictory situation. We have a cycle that is partly bullish and partly bearish. And the true answer, of course, to that is that it is a cycle that probably has a neutral underlying trend. Partly bullish, partly bearish. You sort of add those up and you get neutral. And in fact, the central 18-month cycle of any 54-month cycle is expected to pretty much have a neutral underlying trend. Why? Because the longer cycles, and in this particular analysis there is only one longer cycle that we know anything about, the 54-month cycle, and the longer cycle is during that 18-month period. As you can see, it is topping. In other words, it is pretty much going level. It's going from slightly up to slightly down. It's going through a topping process. So the underlying trend of that central 18-month cycle is indeed neutral, or should be neutral. That's not considering the 9-year cycle, which we don't know anything about. And it's best when working with Hurst cyclic principles, if you don't know anything about a cycle, then don't talk about it, as I have learned to my detriment. So these two 18-month cycles are very well-shaped cycles. And in a moment I'm going to take a look at the US markets, and we're going to look at these same two 18-month cycles, and I'm going to show you how the cycle shapes in the US markets are in fact very different. And they are not well-shaped cycles in the American market. So there's an interesting comparison that I'm going to draw in a moment when I get there. We are now in the third 18-month cycle. Okay, for this current 54-month cycle, which is expected to play out, as you can see from this semicircle over here, bouncing out of the October 2011 trough, coming down to a big trough, which will be the next trough of the 54-month cycle, presently expected early 2013. So now what shape do we expect this cycle to have? Well, this is the third cycle, and given the only evidence that we have, which is the 4.5-year cycle, we would expect this particular cycle to be bearish shaped. Okay? So we've seen a bullish shaped cycle over here on the left. We've seen a neutral underlying trend shaped cycle in the middle, and this third cycle should be bearishly shaped. What does that mean? That means that we expect the peak to occur in the first half of the cycle. Okay, so we expect an early peak. And up until a few weeks ago, it looked as if though this cycle might have a very early peak over here. But of course, price, I think it was last week, price exceeded that level, but only marginally. So in fact, the peak of the current cycle so far is over here. Do we expect that peak to be exceeded? And I must be careful what I say here, because there's a difference between expectation and actual hard evidence and fact. My expectation is no, I don't expect that peak to be exceeded. Why? Because I expect this to be a bearishly shaped cycle, which means that my expectation is that that is probably the highest level that we're going to see for the rest of this year. That's my expectation, but we must look at the evidence before we make any trading decisions on the basis of that expectation. That's my expectation. So how is this cycle shape playing out at the moment? Well, it rose from that trough up to this peak over here. It is now, as we have been discussing in the past few weeks, falling into a 40-week cycle trough, and I've got to be very careful drawing these levels, because I'm doing a very rough sort of a drawing here. But towards early winter Australian, as a South African, it always bothered me when people spoke about the summer months as being the middle of the year, because I know those are your winter months. So we're expecting the 40-week cycle trough to be occurring in the winter months, or June, July. We'll look at some estimates for when that 40-week cycle trough is most likely to occur. We'll look at some estimates in a moment. We then expect, of course, price to bounce out of that 40-week cycle trough. There'll be some renewed optimism, and everybody thinks things are going better. We do not expect price to achieve a higher peak, as I've just mentioned, because this is probably a bearishly shaped cycle. So price will come up towards the semicircle, and then it will head down again, and it will probably end lower than this trough over here, because this is a bearishly shaped cycle. And there are two things, of course, to the shape of a cycle. When does the peak occur, early or late? And what is the relative level of the troughs, the final trough and the initial trough of that particular cycle? So as mentioned, I expect this to be a bearishly shaped cycle, because the 54-month cycle is heading downwards. The underlying trend that we know about is downwards. Therefore, it should be expected to have an early peak, as already mentioned, and it will probably also have a lower trough, which means that towards the end of this year, or perhaps early 2013, we expect a trough of the 4.5-year cycle to form in the Australian markets. So that's our general picture moving ahead, okay, in the Australian markets, and it's exactly the same picture I've been speaking about for the past month that we've been doing Oz Trader Chat. So nothing's changed. So let's just have a look and have a look at a little bit of detail in terms of what's actually been happening in the most. And let's speak about some sort of very approximate projections for when the 40-week cycle trough is about to occur. Here we're looking at the most recent 18-month cycle, and if I start measuring bars, you will see that from that trough, 4th of October, to where I have positioned the 20-week cycle in early March is 22.1 weeks. That's quite long for a 20-week cycle. And as I keep saying, I am going to get